And good morning. It's the 29th of December, 2023, Friday before New Year's. So this will be the last trading day of the year 2023. Wow. Okay. So we have a, hopefully everything's working properly here. Looks like so. Pretty obvious yesterday's RTH or regular trading session. Overnight, we traded basically from one side, traded up to, and then all the way across yesterday's range. Not sure what exactly that means. Just they're very definitely auctioning the entire range. So that means there's really no consensus on value. However, you'll notice that the value area or the POC here is just about smack on top of yesterday's. So these are just traders making some money. The MC, we had basically a doji yesterday, or just no decision whatsoever, up and down, and that was that. This is the NQ. And we're going to open here in a few minutes now. I didn't put my statistics in, so I guess we can use that to be this can be a learning moment here. The statistics come from this homework. Now, this is a study based on 203 days where we are going to open lower in range. I can show you that right over here. This is yesterday's range. We're now trading up here. We are still in yesterday's RTH range, but we're lower than the close. That's all there is to it. All this says is higher in range, higher out of range, higher in range, lower in range, lower out of range, period. These statistics are the percentage or the probability that these various levels will be hit. And what I do now is take, for example, I will take the overnight POC of 84.4%, and I'll transfer that to the overnight POC area on the book map cloud notes, and I will show you that right over here. So this is the overnight VPOC, so 84.4%. And there we have it. And I will do the same for the rest. The overnight mid is 77.5. And I do this every day. Whoops. And I do this every day. I tend to be a little more proactive about it. The overnight low is exactly the same as the previous or the RTH low. That's a pretty common stat. That's 59.1%. We'll get down there today. And the overnight high, which is right here, just a couple of ticks above the previous high and above the and this is the developing value area high, just above the value area high. So overnight we traded. This is the full session volume profile, starting at 1700 last night. This is yesterday's RTH, which will reset here at 8:30 in 4 minutes, and this shows you what's on the chart. So the overnight high is somewhere. Overnight low. I don't see overnight high here. There we go. 49.5. Different color. So the RTH high, ETH high. This is the percent of the time, 49.5% of the time, the overnight high was touched by price in the regular trading session out of 2003 days, the past 2003 days. That's all there is to it. It's not magic or, anything. It's just a straight up statistical probability. And the data set is statistically significant because there are no variables. The only variable in this data is the opening type. In other words, where price opened in relationship to the previous RTH range. And we're going to open here in a couple of minutes. So I am going to get back to my RTH and my proper book map. And here we go. Hook in and hang on, boys and girls. Last trading day of 2003. 23. 2003. I'm living in the past. Living in the past. And we open in about 2 minutes right here. Right at the bottom of the overnight trading range. So will we flush out of this? This is the overnight right here. This is the previous day. So we're right on everything. We're right on everything. The darker colored yellow is the full session POC, VPOC, and the brighter is the current, or will be the current. It was yesterday. This is the mid or half back, whatever you choose. And this is the view app. And we're open in a couple of seconds here. And the market is open. Should be. I don't know why I'm not getting any desktop audio here. There we go. I got ahead of myself. Now we're open. So we will put the first VPOC migration. I put these here so I'm able to quickly visually reference where the POC was. Obviously, it's easy to do now, but as the day progresses, these changes and migrations will page off. So back into the range, we're not into value yet. Almost just touching up to value. This is the developing value area high. Value area low, I'm sorry. Doesn't make any sense. Okay, how can that be? Oh, it hasn't updated yet. I've just updated my charts from the overnight to the RTH, so it'll take us these levels update in about a minute, and that's a restriction not from IRT but from Bookmap. That's the smallest update number I've been able to find. Try this again. There we go. And again. Yeah, so settlement, previous close, mid, obviously changed right at the last moment. This is the previous POC, which is right here, of the RTH session yesterday. So this is a naked volume point of control from yesterday. The RV POC is no longer up here because we're now in a new regular trading session or RTH session. And so that VPOC is accurately being reflected there. Lower. And again with the migration. If we get into this low volume area and settlement, it's highly possible that we'll trade up to a price check at L3. In other words, confirm whether these prices up here are actually too high, which that was the case in the overnight, last probably tail end of London anyway. And we have the Chicago PMI at quarter to the hour. So just a few minutes now. It's at 8:45 Central Standard Time. And I'm going to eliminate that taskbar and stuff to provide a wider view. Hopefully is an improvement. And we just keep grinding up. This was probably a nice test for the last 2 days. Now, yesterday was the same story, just open auction straight out of the gate. And up it went. Traded up there most of the day, I think. The highest statistic that we have so far, and which is expected in this opening type, is our overnight volume point of control at 84.4%. That doesn't mean it's got to happen, and it doesn't say when it's going to happen, but that's typically a pretty good stat. And we continue to migrate north. So in conjunction with the VPOC migration, the stat above, we're at 32, 35. That's just 3 points. It's right within the range for the risk neutral, which I have yet to set, but I will do so now. One, I don't know whether it's, I guess it's intentional. The multi-bracket, wherever the hell it went now. The multi-bracket, every time you shut off bookmap or go to replay, multi-brackets turns off. So it's only available in live trading. Both stops are at essentially 12 ticks, 2 contracts. The first profit is at 12, which then pays for the ride of the second. And that's how risk neutral works. The only once you've scaled, the only possibility, the worst you can do is a scratch, unless you're a complete idiot and you move the stop outside of the break even. So there we go. I will now activate that for both. I trade with a keyboard and then I execute with a keyboard and then manipulate my stops and targets with the mouse because I don't know how to do it otherwise. I'm sure you can actually. And here we sit. So we're loaded up to trade. That's in indicated by the fact that this beauty's green. I keep it off because it's just a little more real estate, right, on the chart side and less confusion. And I don't like looking at P&L in dollars. I don't like having that anywhere visible to myself. And I've asked Bookmap if they could make a little tick box where it is in ticks, then that would be fine. But they, you know, that's just me. So what the hell do I know? Okay, I'm go back now to the full view, and I will also be right back. And we're back here. It's 3 degrees out there. See, it's about 30 something, 34 or 5. I don't know. I would say we're going to slowly grind up to the main or one of the larger statistics, which is the overnight volume point of control. And we're apparently being accepted inside of value from yesterday, which was about 31.5. And a little higher than that, I guess, 32 quarter. So 32 quarters right here, that's settlement is right there. We're being kind of accepted into that value area. I don't know how the hell this thing decides what's where, whether, for example, settlement is on top of the value area low. And up here is the previous RTH value area high. Underneath it here is the value area low. There's no real way to decide who does what. This is developing value area high, which is our current trading session now, today. And 5 minutes to Chicago PMI. Big number. Definitely market mover. It's a 3-star event on investing.com, investor.com, whatever that's called. Here's hoping this thing is working right. I spent a little more time with OBS again last night. Just been having some issues with the audio. There's no problems with video. Very clear, very crisp. I trade with my primary 2 monitors on my stack are 32-inch 4K. But I push 1440p to YouTube, and good, clear, everything. The only problem I've had is with audio. cutting off the first letters of some of the words. So I think I got that straightened out last night. Nothing. I don't know. I guess maybe I'm anal, but that irritates the hell out of me. So even me, and I can't imagine someone else tuning in. They go, "Who's this AC that's doing this?" Purpose of this stream is my video journal. I can't imagine how helpful it is to be able to replay these and see what I was seeing and hear what I was thinking. It's the reason for the continual narration. Doubt if I'll have a trade, but you never know. The trade, I guess, would have been off the open, as was yesterday. Just hit into it and, would have been scaled up here and away we go. We are continually migrating north, and I would suggest going to hit this VPOC. Oh, not VPOC, but the overnight VPOC, which is a big statistic, 84.4% of the time out of 203 days. Price tag that number. This is our current VPOC. This is the VPOC from the overnight. And there we have it. I'm not going to enter, and I typically don't ever, unless it's a mistake, get into a position right ahead of a big 3-star number, and that's in 1 minute. Very likely a market mover, but on a day like this, the last trading day before the new year, could be a complete non-event. We'll see. We will see. We'll see what we see. Whether I don't see that. A little bit of the tab, try to see what kind of background noise is being transmitted through to the stream. Just tapping my fingers on my desk here. Huh. Okay. The report is in, and boy, that was a big whole lot of nothing at the moment. There we go. Might be going to get something here now. Did migrate up a tad bit, and so it's highly likely that we're going to bounce up here and catch this. If they pull back here, got to be sure and remember that this is developing value area high so far today. That's about the biggest non-event I ever saw for a PMI number. Huh. That surprises me to a point that I'm wondering what the hell. I'm wondering if I have my report wrong or what the hell happened there. So here we're getting a little bit of correction. you could consider this a price check at IL3, also down here to the VWAP or mid, and there is a structured trade that is VWAP to POC. The problem with that is this is 31 and that's 33, so that's only 2 points, right? That's not particularly good range. Not a particularly good range. And I still am not understanding what the hell happened to the PM, whatever it's called, PMI number. Boom, boom, boom. Okay. Yeah, I don't know what's going on here. Anyway, we'll see. And so we bounce back down here. I'm not showing all these times I add stuff because I've I have explained that and used it more than once. So if we catch a trade here. I just can't enter that trade at this point. That's only a 2 point. It's only 2 points to the target, which it would be. I do need to do that. Only be 2 points to the target. But you see that the full session POC has migrated down. The current session POC has migrated down. And here we are at VWAP and mid. Looks to me like we could be being rejected out of value. Or, make it up as you go. I don't know. Trying to get the narration figured out. Yeah, I think today's day I'm going to just be happy not to be involved. Yeah, there's a VWAP to VPOC structured trade. This is 1 tick, 1 point. Well, a half a point. I'm sorry. There's no range. There's no meat on the bone. And now, had you taken this trade, looking for the statistic or the target, which would be a price check up here, that's a good one. That's 3 to 4. So you're going to just scale at the target, and then you still got value area high and previous high above. Where's it going to go? I don't know. And now the current session POC is dancing back and forth like a madman. And I might point out I'm going to go fill my water jug. And what did I miss? Looks like a whole lot of nothing here. Boop, 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 boop. If you look at the Arinco of this stuff at the right tick size, it's what FT71 refers to as a zipper, because it does look like a zipper. Just a consolidation. Obviously, we've got a low volume node here into the next distribution from last night. We have no excess at the top, which is a little suspicious. I would say we're probably going to zoom up here and catch this stat into this distribution, and maybe even tag out the liquidity that's parked up here at the previous value. The value area high is from the last RTH session. Developing value area high or low here is the current session. Now look at that. That's the developing value area low, and that's the high. What are we talking about here? It's 2.5 handles. You know, that's ridiculous. Yeah. So this is a good opportunity to narrate, be patient, come to peace with the fact that if you are running a trading business instead of a video game, the biggest percentage of your time is going to be spent watching and waiting. You want to know, as you have hopefully understood, my target from a structural point of view so far today is the overnight point of control. It's the highest probability, and it's likely, right? This is an atypical day because it's really light. there's only 173,000 contracts traded since 1700 last night. This is for the entire session starting at 1700 or the beginning of the ETH. Well, typically on the ES, we'll trade out 200,000 or 300,000 contracts in the first 2 minutes of the RTH session. So everybody that's, got common sense is off on vacation somewhere enjoying themselves, burning up Aspen or something. So extremely light volume and really a good time to just watch and learn, which is what I'm doing. Look at this. Here's the open. Yeah, if you got long, good for you. If you didn't, boop, 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 boop. These are 2-point swings. 31, 32 half, 33. Okay, call me a liar for 2 points. Now, you can see all the times the VPOC has migrated back and forth, and I've even missed probably a couple over here. This is the developing volume point of control. This is the full session, which is now swung down here and joined up with the current. My belief is that we're going to, at some point in the day, this is the overnight or the previous RTH close settle. We're probably going to come across this, jump this low volume area, and get up to test this stat, perhaps even the value area high. But, that's a real dicey call. We're only talking about 1.5 points back and forth from the mid up to the VPOC, Now comes a stat pretty quick. The IB30, which will be in effect in a couple of seconds from 9 o'clock. The IB stat, which is an old one, says that first of all, the IB high and IB low are the high and low of the first 1 hour of regular trading session, period. After that 1 hour or 9:30, they don't move anymore. Until then, these will move up and down depending on price action. The IB30 says that not only, and there's a very high probability that price in today's regular trading session will take out either the IB high or IB low, and it's in the high 90s every day. There's a further stat that's been developed by a fellow at the T-Lab, Traders Lab, which says that the IB30, in other words, after the first 30 minutes, which we are now in the second 30 minutes, the IB low or high will be expanded. And that's got also an equally high probability in the 90s. So likely, and if you see, this is right here, it's hidden by the Globex VWAP, but this is the IB high. So it's only got to just scooch a teensy bit towards the target, and the IB30 stat will be taken. And I'm not going to put money at risk on that for sure. Even though it'll probably happen. The thing about, I think one of the key steps to positive psychological approach to this is that to establish and firmly, convince yourself, belief, whatever, you're running a trading business, not a video game. And the business is, first, you determine statistical significant probability of an edge, which means a percentage, one percentage is greater than the other. In this case, there's an 84% chance or probability that this stat will be taken. Okay, so if you're going to look at that, or there are various structured trades, the IB30, the VWAP to VPOC, those kind of things. What you do is you collect statistics and you determine what setup specifically, and that means specifically the same context, the same opening type, the same everything else. You can't have any variables, or the data is not statistically significant. So you capture all of the instances where you receive that kind of a trade setup and trigger, and you enter the trade. How many times did you get a scale? How many times did you get this target, the second target? You know those. Once you know those statistics, then the object is to just keep taking those setups and let the law of big numbers bring the money to your side of the table. It's the exact same concept as the gaming business in a casino. The house knows very specifically their edge. They know exactly what probability of time, percentage of time they win 21. And their goal is to do two things. They never vary the rules, and they take as many of those setups or trades as they can. And in so doing, the edge, or the probability, or the percentage, or however you want to phrase it, brings that money to your side of the table. And in the case of Las Vegas or somewhere, it's pretty damn obvious who's making the money, right? I don't have a huge casino or a Sphere or any of that stuff, and they do. So, it's that's the difference. You have to realize this is a business, and this is one trade out of thousands, but you have to be rigid and very, very disciplined about your statistics first and vetting them, and then taking those proper setups under those conditions. And you have to come to peace with the fact that this is basically a random outcome and a random environment. The probability of the very next trade is 50-50. What the hell? You don't know if it's going up or going down. You think so, and you think, well, it's gone up here and it's going to go, and I think that the percentage is higher, that it's going to go here, that it's going to go down here, but you don't know that. And the statistically proven that the outcome of the very next trade is 50-50. And it doesn't matter if you've had 10,000 losses in a row, or, the market's gone down 10,000 times in a row. Doesn't mean it's going to go up the next one. It's 50-50. Got to get your head around that and come to peace with it, because that's where it's really at. This now is getting to a point where I would like to think I could get up there, but there's only 2 points now. And it's been just now. Here we go. Okay, so I hesitate. He who hesitates is lost. Right? We're now going to take that stat. We've taken out the mid, so there was 77.5. 84 is coming up. The naked volume pointing control has been hit, and so there was a 4-point, 5-point trade off this mid. But for me, not a viable trade, because there was not enough range to the first obstacle, the scale. The theory about the risk neutral trade is that your first of all, the first scale has to be equal to the stops. That's how it works. And the second part of that is that the first scale has to be before the first major obstacle. Now, you can do that one of two ways. If you want to enter down here at, let's just call it an even 31, and your first scale is the VWAP, which is 31.5, you can only have a 50-cent or 2-tick stop. And then you're risk neutral. But what are the chances of being scratched with a 52 tick or with a 2 tick stop? Just stupid. So you have to be sure that your risk reward ratio is sufficient to justify putting your capital at risk. And 2 ticks or something isn't. You want to have at least 2 to 1 or 3 to 1. My risk neutral setup is 12 ticks at the first scale and 24 at the first target initially. So that's 2 to 1 minimum. And then sometimes you start seeing targets out ahead and you move that stop out and you'll move your second target out looking for targets. You'll move your second profit target out looking for targets in the setups or in the data. In other words, if you're targeting the overnight low here, which is actually here, the overnight low, then you would, so let's say you short up here and you're targeting the overnight low. That's actually, well, it's not viable because your first obstacle is 32 quarter. It's only 2 points. It's just a tight range. It's the last day before New Year. It isn't a good day to trade unless you're crazy and scalping and having all kinds of fun. In my opinion. And I'm sure there's guys in the T-Lab or scalpers out there or, pick one group that are just trading up a storm like they're killing snakes and hopefully on the right side of it and in rhythm with it and making money hand over fist. Good for them. Here's a 34.5 test right at the VPOC. Basically, you could say that there was exhaustion. We got 111 stops out here, and we came back up to test and only got 3 and traded back down to the POC. If 2.5 points is good for you, 2.25 points is good. That's fits your trade plan and your risk parameters and your risk reward. Good. I'm more conservative than that. And I'm not saying I'm right by any stretch of imagination. And there are some guys who, I'm sure there are some people who got long over here in the beginning, targeting this VPOC and got up there. Then they, left a couple of ticks for the sweeper and they're out. They're out and done. And that would be 28 to 35. So, 8 ticks. Handles, I'm sorry. And I've noticed myself lately becoming more and more conservative, and as they say, confirmations for Catholics, not traders. So, you're never going to have a sure thing. You have to go with probabilities, and if your trade plan and your statistics show you that, in this case, an entry down around here off the open someplace was viable as a mean reversion, kind of. You could sort of say that from a low up here to the high and targeting the overnight volume point of control. Good. Look what's happening now. or mean reverting to the other side. And we've come all the way across VPOC, VWAP, and mid down to here, basically. Here, price check aisle 3, right? It's the only real big price check would be down here to the open, which is a stat, overnight low. There's a stat for the previous RTH low and the open too, I'm sure. I'm just that's where it's at. I am so hopeful that everything is just happening. Jim Dandy here. So here's our Rinko. This is the IB low. This is the IB high. These green lines, they follow along. It makes it pretty easy to see how it's been moved or pushed or touched, and then eliminates any question in my mind about the IB. Again, we're at the yeah, we did satisfy the IB 30 stat by this maneuver right here. After 9 o'clock, the previous IB was here, so it's now been extended to here. So the IB 30 stat, once again, has been effective, or whatever you call it. Yeah, so that's I like that stat, and it's I find that earlier in the morning and sometimes later in the evening after 2 or afternoon after 2 are good trading times, but the middle of the day crap. Now here we have an interesting situation. I have a real hard time trading from the POC out, especially in this slider markets when typically all day yesterday we were mean reverting from down to up to down. And there's an old saying from the market profile days, don't diddle in the middle. You have to use the concept that, understand the concept that the POC is the most traded price. It's the highest volume, meaning it's the most traded price. What happens at the most traded price? Boop, 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 boop. It slops back and forth over the top of the thing. So your probability of getting hammered or taken out is extremely high, I think. In that case, then, this test down, what's that? 2 points again. Yeah. Have to remember that the entire range is 27 to 35. 8 points. The entire range so far today is 8 points, 8 handles, whatever you want to say. We've tested the mid now again, and we could very well come up here and test, as we have just done, and then break low. Kind of thinking rejected out of developing value, which is right here. If they could reject it out of the developing value low and head south, well, yeah, that could well be what's going to happen. And I will just be right back. And what's going on now? What a surprise. Here are the epoch migrations since we opened. There's the open. Boop, 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 boop. And here you see it over here. Doo, 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 doo. I mean, it's a light day. We've just turned 200,000 contracts since 5 o'clock last night, or 1,700 last night. Okay. Again, testing that POC, you know, falling out the bottom, we'll get those 3 points, no question about it. It's just I have a problem testing up and trading out of the middle. I don't know what's a problem, but kind of a rule, I guess. What the hell? Oh, let's see. I was reading something from the Traders Lab. It's the Bookmap Discord chat Traders Lab. There's a link in the description here. It's free. They don't solicit you, supposedly never will. But the guy who started it and runs it's a guy named Tom B, who's a definite pearl in the garbage of the trading universe. He's an experienced senior trader, professional, been doing it since 1980 or something like that. Has nothing to sell, only advice. Effectively pushing book map. That's the whole thrust, but it's not trying to sell anything, no courses, doesn't call any trades, but has a lot of good information, a lot of sound logic. Highly recommended. He streams usually every day from 10:30 to 12. That's an interesting one to pick up. You might be. I record them all and then usually listen to them later. I can't listen and type and talk and, do all that crap at the same time. I try to be focused on what I'm doing. And he says that, when he starts streaming, he doesn't trade because he's got to focus on one thing at a time. And that's the same. And there's several other good people in there too. There's quite a few. I don't know how many there are. There's probably a way to tell, but I don't know what it is. So anyway, you can see here, down and up, and down and up. And that's about it, boys and girls. I'm thinking breakfast, something, chase mama, whatever, more productive. And, there's somebody that'll say, oh, well, I entered just before the open because I saw something, 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 and, took out that, traded all the way across and took out the target at the EVPOC. And that's likely that they are not lying and actually did that. And if so, great. I'm just a little more conservative. I'm not a little more, I'm a hell of a lot more conservative than that. I very seldom bang into the open quickly. And that's probably not a good thing. I probably need to be more responsive there. Problem I have is that in the initial stages of my trading, I had no clue what I was doing and over traded like mad, so I am real hesitant to, I want to be real clear that I'm actually thinking logically that that's a good idea rather than rationalizing, if that makes sense. Yeah. Coming up to the IB in 5 minutes. We've already pushed the IB 30, which means, just to recap, then you see how we came up here and tested this price check at aisle 3. Pretty amazing, isn't it? Is this still too high? Burp. Looks like it. So, but in so doing this maneuver right here, this price action, we've moved the initial balance up here. 48.35. Right under the EVPOC. That's why you don't see it. I don't know how to make that. I guess I can't. I don't know. But it's easily spotted on the IRT charts. As I said, it's these green lines and the green numbers. So there's the IB high is 48.35. The IB low is 48.27. Pretty easy. So in another few minutes, 3 to be exact, the IB will be set, meaning that the IB low and the IB high will not move anymore. And then the stat of the original IB stat will be on the table. And you might expect, I might expect, and I do actually, expect that the IB low will probably be the stat that's taken because we've just tested up here, determined that this is too high, both the full session and the quickly the, well, can't really call that the a POC because that's just at the open and the POC at the open was effectively actually right there. So we might test here. We have the POC, the VWAP, and the mid all stacked on top of each other. Not good news. But we might well take the IB low. Remember that the mid is the mid. It's the middle. So it's this number right here is halfway between the IB high and the IB low at 930. It will cease to be that after 930 because the IB high and low will not change. At the moment, it is because it's the middle point between the high of the day so far and the low of the day so far. Mm-hmm. I think, as I did yesterday, I will shut the stream off at 10, top of the next hour. If it doesn't look like anything's going to break loose. I think, I don't know about anybody else, but I find myself weakening as the day progresses. As I stand and watch the day, I start coming up with ideas like I just did. Okay, we've taken out the IB high here. That was too high. Now we're going to test low. The IB is going to set at 930. So likely possibility we'll come down here and test this out. That's rationalization. Right now, what we've done so far is we've traded up off and we have chopped back and forth. That's about it. We're in a 7-point range. Is there enough meat on that bone to justify risking part of your account? That's the question you got to ask yourself. Right now, this is 31. If you are smack on, and I wouldn't be, trading out of the POC down, that's just 3 points, right? 3.5, say 4 points down to the, so you've just scaled. And then what's your target? Nothing down here. There's a big pile of liquidity sitting at 23, which is an old naked volume point of control from a few days ago. 2175 is a naked point of control right here. We'll put that in over here. And I think what I'll do is just move this one. Yeah, 2175. Got to look further into that and see if if they are in fact the same. What I try to do for these older ones that have been touched, but were very strong points at some, reference points, I change the text from white to black. Same way with the MC. I know it was there, but it's not the current one. That's the idea there. A lot of liquidity dropping in ahead of the POCs right here. Developing value area high, close, VWAP, settle, blah, blah, blah. Nah, settle's a little below. A lot of liquidity parked out up here. Can sometimes act as the lid on the pot or a magnet. In this case, we have essentially been mean reverting right here. That's all. Boop, 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 outside in. And now we're heading down for that point that I mentioned. Going to come down and test this one. Is it too low? Possibly take out the IB low, which is this little absorption that happened down here. But it's all going to be without me. Yeah. Now there's 4 points. From the middle out. Now, the question that needs to be asked, are we going to mean revert? That sets up, well, it's an outside in trade. And one of the things about that that's discussed in other places, TopStep guys, for example, talk about asymmetrical trades. And what they mean by that is, ooh, look at that big baby right there. There went the IB low. And what the hell was all that about? Huh. I guess that was yesterday's stop run. If you look at all of yesterday's trade, we just took that out right here. Well, actually, we took it out a little bit there. So the stop run of today's trade, I guess. I don't know. There's so many different ways you can try to figure it all out. And now are we going to mean revert back up? Being a quick guy, and I was not, get long down here on that one. And look at that mean reversion back to the top. That's got some range. That's got the proper statistics. But doesn't look to me like we're going to hold that. NQ is following along. So we got the EVPOC stat. We got the overnight low. We got the IB low. Oh, IB stat, I should say. I'm sorry. So, yeah, and we got right down to this high volume node, which is from the micro composites. That's how I do them. I can show you that. This is the high micro composite chart. My philosophy is as long as price is overlapping, it's in the same MC. And price is overlapping right here. This was the big Fed announcement that they're going to cut rates. Some guys, the T-Lab folks, I believe, they cut it off here and started calling this a new MC. So what I've done is just, because I can do it in IRT, no problem, I can just add this little volume profile up here within my greater MC. So my greater MC has got a VPOC of 2675, and the current small one up here, which is used by some other guys, is 6800 or 68 even. These green lines are automatically generated by IRT, and they are high volume nodes. You'll notice high volume, high volume, high volume, high volume. Okay, high volume. And I push these to bookmap, cloud notes, a separate column than the first or than the price levels. And go have a look at that. So these are the price levels which are pushed from bookmap from IRT to bookmap, and then this is the high volume node column, which is derived from the MC. Boop de boop. Interesting, huh? Yeah. So sorry, I didn't short the overnight high and or overnight POC and sit back for the mean reversion to here. 10 points, you know. But unfortunately, when you trade, you're not able to trade hindsight. And so, I haven't figured it out. I have to just try to stick to my guns and my trade plan and my basic rules. Like it's pretty much a basic rule not to trade POC out, especially when the last 2 days we've been mean reverting. Now, an asymmetrical trade would be to take this low. Asymmetrical meaning here's your stop, or here's your entry, here's your target, several handles away, but the low of the day is just a point or two below. So you can put your stop just below that. If, in your opinion, if it goes past the low of the day, current low of the day, you're wrong. So there is an asymmetrical relationship between risk to reward. And that's the thinking behind that trade. I think I got all confused with high volume nodes and broke away from that commentary a minute ago. Pulled back up to this low volume area right here and trading back down. We could be setting up to create another distribution. Overnight, we had two up here and down here. So far, well, we got a micro distribution here of a heartbeat. Got this one, and maybe we'll start to build another down here now around the IB low. And we still have a naked volume point of control and this big pile of liquidity living down here. So, I also have another component in my thinking and trade plan that may or may not be justified. But in my view, a breakout trade is FOMO. And I realize that there's a whole raft of very profitable traders whose sole trade plan is breakouts. The turtles, Dennis and his turtles, that was all breakout trading. But in my context, in my trading, I start thinking, oh, it's going to go. And my preference is to short. So I start looking at these and then I consider that a breakout and I consider that an error. And in my written journal where I, flag all that stuff up and try to make, and then able to filter and, try to derive some statistics from that. That's an error. But, so there's an error. I was thinking it's going to break out from here. That's 26. We're down at 24. Probably going to go down to these naked volume points of control. So, there's 4 or 5 points in a possible move to the downside. And there we go. This liquidity moved out of the way. It's been sitting in there a long time. So it's way past the open. Here's the open. That liquidity's been parked out here forever. Well, at least in the morning, since the morning early, 6 o'clock. So somebody wanted it down there and they got their wish. They got their wish. Now I start getting a little bored. I start getting a little antsy. I start thinking, well, what's it going to do? This would be a situation where, assuming there was some sort of a trigger, you'd throw on your asymmetrical trade for mean reversion. But it looks to me like we're looking south. That seems pretty obvious here. NQ is falling out of bed. We're going to get these naked points of control pretty quick. There's one from a long time ago, and here's the current one. So, yeah, my don't trade breakouts costing me about 4 or 5 handles. But so be it. And now, was this any kind of a setup or trigger? No. Nothing there. Well, other than the open and I guess you could say a level, but that's nothing really. Don't think. Looking around here, I don't see anything. Well, I guess this could have been the value area low test of the developing value area low in this area. Let's look over here. See this blue line? Here's developing value area low, developing value area high. So here we go through it, test back to it, and sell off. We could say then that we're being rejected out of value, and that is a viable situation. Same happening over here on the market profile chart, which I keep set at a few ticks so I can see something. If I put it out to full size, you can only see a bit of one profile. Kind of annoying, but that's the way it works. We haven't reached our NVPOC yet. But I guess I missed my opportunity here, or here, or, here, or hindsight. So clear. Love it. Tom in the Traders Lab has a narration technique he posts a lot of times going, if this, then that. If not, then what? The theory being you're going, okay, so if this breaks, then the mid, if not, then what? Then we're going to go down and get this naked volume point of control, I guess is, I don't do it quite like that. Maybe that's a shortcoming of mine. But there's our naked volume point of control. Notice that the current values have not shifted anymore. So we're definitely exploring south, and looks like bottom's gonna fall out of bed. So I'm just over the moon that I didn't take a short up here when we tested this area. And that was a developing value area low. So that was clearly a stupid mistake on my part. That was a test of the developing value area low and rejection. That was a viable trade in my plan, in my world, in my thinking. And what's this liquidity that we're banging on down here now? That's kind of the value area low from Wednesday. Wow, it's really going to fall out of bed now. Oh, yeah. Now comes the FOMO, boy. Now you want to get on that short. Now's the time to put the mouse away for me. And you jump on any one of these places. This little pullback here, short, and you're down, 6 points. So I'm not saying that those aren't tradable trades for people to take. I'm just saying that I find myself in the FOMO state when I start seeing that kind of price action. Here would have been a test. Here's a test, a pullback, a little bit of a counter rotation down in short. All of those can be viable in your trade plan, but I am so adverse to FOMO or afraid of it, or, I guess it's like a junkie, I don't want to have heroin in the house. If you know what I mean, or drugs or whatever else it is. It's a FOMO. It triggers FOMO, and I have to be, the minute I feel that, I just kick the mouse aside with my fingers and sit and watch, because I don't want to succumb to that. And I'm thinking in the term of a trading business where it's one trade out of thousands, rather than, oh boy, it's $500. I mean, I'm up $500 a day or $1,000 a day or whatever it is. So that's, I think, important. And, what the hell? It's now damn near 15 points from up here. Right? So was that the right idea? That's going to be hindsight that pisses me off for the rest of the day. And if you look over here was the test. Remember now that the value area is changing as price progresses. Value area at when this all happened was up here. Value area low, developing. That's why it's called developing value area low. And so when we pulled down here, came up and tested the value area low and rejected out of it, the short was right there. And down we go. 15 points or something, I think. Again, hindsight. Boy, oh boy. I'm the hindsight pro, right? I think I'm going to start a website and a YouTube channel and call the $1 Million Trader or some stupidness like that. Rear view mirror. RVM Trader. There you go. The RVM Trader. I got to remember that. That's pretty funny. I'll have to start a YouTube channel or a Twitter or something, or X or whatever it's called now. RVM Trades. And I'm going to be right back. Damn it. Wrong way. Talking to a muted mic. So this pulled back to the low volume node and the naked volume point of control, which we just took out. Would have been a good entry. Not really a test. I mean, not really a trigger, though. I guess you could say 40 here and then a 27 back here and down about 3. So you're only down to a scale, and you've got what? Some liquidity and a new low below you. So that's, yeah, I seem to be doing pretty good in the rearview mirror today. I'm RVM today. Yeah, so not a high probability trade because of the scale. Now we're at 4 points, so it would be scaled and risk neutral. But what's the target? A new low? You know, man, eyes are driving me crazy. There, and looks like maybe so. Yeah, well, I'm sure hoping that the audio has sorted itself out. Again, I'm not trying to be a fancy influencer or whatever, but I even, when I review the stream, it pisses me off when I hear all that chopping on that front end clipping or whatever you call it, where the first letters of bond, for example, or stocks is cut off. So I just want a high quality, more or less professional stream. I think the video is great. I got I'm streaming off two 32-inch 4K monitors in my rack. So that's all good. If the audio comes right, well then, bam, there we are. So had we taken this scale, or I'm sorry, this short, we would be scaled, risk neutral. And coming back up to our entry, 3 handles above this would be right up here at this price level, easy to remember, would be our stop and scratch. Now let's see what happens. And liquidity's building up a little bit under price here. So are they calling it or are they pushing it? You know? And this flashing going on up here is algo noise, as near as I can tell. Wow. Look at this. NQ is having having a bad day. ES isn't much better. Oh, or a good day if you're a short seller, and I normally am, but I guess I've gone over that enough today to not need to do it again. How do I do that? I, I don't know how to do that. So I'm going to put the B right back up. All right, so back here, I can focus on this again. Ooh, look at the liquidity piling in below them. Pushing that up, baby, up. Back to that naked volume point of control, and notice how the developing value area low has traded down. Now, are we going to test it and fall through it again? How many times can you go to the well, right? How many times can you go to the well? Oh, man. Huh. Can't seem to. Same crap over and over and over again. Okay. Developing value area low. Developed lower again. Once again, we're still right up in there. I wonder if what have we got for a target though? 20 to 18. We don't have much room down here. We got a lot of liquidity parked at 18.5, so that's only 2 points. Looks like this was a reasonably good setup test on the developing value area low and the liquidity pulling out of the way. Now it's too late to get in. That's chasing and FOMO-ing, FOMO-ish, FOMO-arita. I don't know what. Not good, whatever. So if we had taken this test or any one of these here, preferably this one or this one, as a trigger for here we're 45 up, here we come up to 5, here's 2, and any of those are triggers, short. We're just now at scale for risk neutral. Once again, we only have high volume node and a new low of a day in this liquidity for a target, which isn't much. But I'm thinking just from looking at price action so far that we've sort of, we've definitely fallen out of the mean reversion mode, right? They're looking for value. We've got 1, 2, 3, 4 distributions. Notice how the lovely kurtosis here, when it's just a nice bell-shaped curve. We don't have any of that going on over here. So don't have any of that going on over here. Let's get back over here and see what happens. We tested back up, and we're back down. So I've missed a number of good opportunities today. But I must say that I was never really planning on trading because of the volume and where we are. And this damn thing could go, who knows where. What if we got below here? We got all kinds of stuff going on below, including 4768 for the MCV So, there's a lot of downside available. And we're bouncing right up against the all-time high, which is another factor. The market goes up to go down and goes down to go up, as Tom often says. And there we go. Through the liquidity, pulled out of the way, didn't really trade. And down we go for looking at a new low. That would have been a 21 to 15, so 6 points. It's this trigger right here or here was a 6-point trade down to there, directly to a scale, and then down. So that would have been a very viable risk neutral setup and trade. We've obviously fallen out of this, all of these little distributions down here. Look to be actually liking this price, building a little more volume down there. We'll see what happens, but don't forget and notice that the POC is still not migrated, and there's a ways to go. We got 10,000 contracts here and 5 down here, so it's got to double the contracts, got to double the volume in order to get the POC to migrate down. And 1010. I guess it doesn't hurt to let this run. I will. The further we get into this Friday, more apprehensive I would be to take a trade, especially down here in these breakout levels. So I'm going to put this on the music. Oh, this thing is the energizing bunny to the downside, huh? Damn, the more I look at that, the more depressed I get. I was at 20, looking to short 21. Ugh. Well, I think I'll close the stream and stop looking, making me mad here. And of course, look at this thing go. Each one of those little pullbacks is 3 or 4 or 5 points, and they're all lending themselves to a increased amount of FOMO. So I will wish myself a happy new year. Yeah, I think I'll let the stream run and just go back on the timeout music. Uh, so let's see now. What am I doing here? Busy typing and looking at my other world here and forgot what I was thinking about. Look at that thing fall down there. Well, that would have been a lovely short. In hindsight, would have been just beautiful off that high of the day of the IB at 48.35. Yeah. So clear. So clear. And I guess you could call that a very, very convincing IBC, which is initial balance continuation. That is a structural trade, and I was completely oblivious to it. My mind is not in the game, so even more reason not to be trading. Except when I look back at this stream, I'm going to be mega pissed. I am definitely a short seller. That's my preference without question. And so when there's a day like this, I am, mega pissed. Mega pissed. I'm going to slap the walking base back here. So we had another pull back to the low volume area right here around 12, and another handful of ticks fell off. In RD. ES 50, CY 23. Yeah, so this is those times when really disappointed. Yeah, not really disappointed in myself, but I could have, been up a lot of money today, which is always a nice way to go into a Friday and a holiday. But instead, I'm busy narrating and looking at other things. And that's life in the fast lane. That's the trading business. Jesus, hindsight though, huh? Look at that. Tesla IB low and out of bed we go. Down about 22 handles to these lows. And will it go lower? No, the hell knows. But I'm not going to be trying that because I have an I have an aversion to getting my ass spanked. And as I've said ad nauseum, this is breakout stuff. So this was another setup, quite well, not as pronounced and vetted as the developing value area low rejection, but this is a low volume node, so it's a microstructure trade. Low volume node right here. Ironically, low volume area in the full session, and then more or less an exhaustion because we 18, 20, some stops around here, you'll see up here, and then we pull back up here and get two. So that's a relatively viable short, and that would have been at about 1175 and down to there's your scale and there's a target. So yeah, that would have been a good trade. They were all good trades. They're all good shorts. So yeah, that's just pretty doggone disappointing that yeah, timing is everything, I mean, any normal day, I would be over the moon to see a setup like this and so excited about uh, the market moving in my favorite direction with clean, very defined setups. And here I am taking care of some other business, and the market continues to plummet even after clean setups, as I just got through talking about, with a little exhaustion up here, no heat ever. And could just keep throwing your target down. And if your trade management is such, you could trail it up behind these swings, your trailing stop up behind these swings after you once get your scale off, and so now you're from about 11 quarter down to 4 area, maybe 3. And if you're looking at this liquidity down here, you may get down here to the 10, 11 points again. Damn. Damn. But one day out of many. And I smell some pretty good things emanating from the kitchen, so I might have to take a mosey out there and see what I find. Yeah, that sounds like a good idea. My stomach thinks my throat's been cut here. Well, again, I'm not going to take a breakout trade, but I will point out that we are at an absolutely weak low. There's no excess at the bottom of this. You see how the top up here's got some. Now, this is just the, this chart, but at least it shows you the idea. This is only the profile for what you see on the chart. But the same goes for here. There's, 1,400 contracts down there and no real excess. So it's very likely to expect some lower. Who knows? There we go. And now we got that excess. So what is going to happen now? These boys are killing me. Now we're getting the classic zipper of consolidation here. Notice how these Renko bars look just like a zipper. It's irritating. Okay. Okay. Not sure what got into me, but I'm having a sneeze-a-thon here. Wow. So, okay, definitely the top of this hour. I'm going to wind the stream down, and I'm going to turn the damn thing off so I don't get tempted to jump on and take something and then have to go back and voice over, narrate over the recording like I did on one trade last week. It's identified clearly as it's re-recorded. Wow. So here we are, bouncing back up to that low volume node. And not quite. Low volume node's actually up here at 9.5. Liquidity. Probably I'll go, maybe not. Jumping in there just above the high volume node and acting like a big shot. Keep bumping the damn microphone. I'm sure that sounds wonderful. So, interesting here. Got quite a big, this is a good representation of what's really happening today. This was yesterday's little hoop-de-doo, and here's today so far. So this is the market goes up to go down and goes down to go up. This is that big hoop-de-doo from the FOMC announcing they're going to cut rates. Everybody was real excited. Everybody got their hopes dashed. Here we go up again, and now this, and there's a all-time high just above. So once again, now we're getting up to our low volume area. The further we get into the morning, closer we get to the 12 o'clock mid, etc., the less encouraged I am or to trade. Obviously, the test of that low volume or the developing volume area right here was, this area right here was excellent. Test up, test the low volume or the developing volume, and this is now the developing volume value area low. When we first did this, it was up here. So this was the test up here, and then down she went. Man, I can't quit sneezing. So we are, in a sense, having another mean reversion idea here. In this smaller fractal, mean is right around here, and it's one of these two. I would guess it's this one. I can't quite read the volume there. My eyes haven't readjusted. Right here, actually, 59. We got up to the low volume node. Little notch. Didn't quite get up here, though, to the developing value area high. That would have been a nice retest rejection. But now we're down 3. So had we entered, this would have been a scale. Gotta stop using that we shit. I hate that. People do that. I'm not the queen or the king. Thank God. Now looking at 4 points on that little test right there. Mean reversion down. So we're scaled at 3 and looking for lower. There's some room down there now to get down to those lows. Uh-huh. Here we go. So the short up here was a viable entry with the scale being about this micro composite VPOC. That would have been the first area. Kind of, you can sort of see the tops here that have tested it a number of different times. And that's the scale, 9 to 6. And now we're looking at the second target, or risk. It would be risk neutral, and looking at the second target. Just irritating that I could have had a lot of chips in the bank here today had I not been, I guess, I had sort of pre-adjusted my thinking that it was going to be a no trade day, and probably not a lot of action, and that's what I get for thinking. And look at that. Bounces off the high value node and goes racing back up here. Again, we're approaching the 11 o'clock hour. Closer we get to the middle of the day, and especially on a day like this, into a holiday session, there's only 487,000 contracts traded since 1,700 last night. So this is just stupid as far as volume and liquidity. And if you want to really have a good laugh, only 246,000 have traded on the NQ. So the snake is definitely dancing. And after having missed these big, a real likely spot for FOMO, for myself at least, is when there's a big move in the direction that I normally prefer, which I didn't partake in, and then you really get fixated on looking for trades, and that's when get what word is it starts with a P. The tendency of humans to find patterns. A holdback from our days in the savannah when we were needing to look out for lions and tigers and bears. The quicker you could identify a pattern, leopard, for example, the longer you would probably live. That's not the case nowadays. Nowadays, it's almost, especially in trading, it's kind of the other way around. The propensity for us to find patterns and see patterns in things is a detriment. And here we are. Look back at some of these locations here, perhaps. We've got wrong mouse. Good idea. So look at that. Oh, baby. That was that was a decision, wasn't it? They got up here and tested that BPOC for both the current and the overnight. And at that same time, the mid and the VWAP are all in a big pile. And look out below. The 930 stat kicked in, and they went googling down here and took out the IB low right here. Then tested back up, and there was the perfect entry for the IB continuation trade right there. And and just proper. If the trade were properly managed, it's 28 to 8, 20 points. 20 points. Pretty disappointing. Pretty darn disappointing. So yeah, the IB stat. Wow. Wow. And here we are, back alive and well, and I'm almost through with all my Muslim friends need that. Plug their ears, my bacon sandwich, which was just out of this world. Actually, we lived in Kuala Lumpur for, I don't know, 11, 12 years. I did. Where I met my wife and stepdaughter. And obviously it's a Muslim country, but they have bacon, but it's beef, and it pretty much tastes the same. It's you can tell a little bit difference, but it gives you that same kind of fatty, smoky flavor, and it's satisfying. And of course, works for their religion. Jewish also, of course, but I'm much more experienced, and I've lived a long time in Islamic countries. Number of years, 10 or something years in sub-Saharan Africa, and then 11, 12 years in Kuala Lumpur, Malaysia. And now what are we going to do? Ooh, here we are at the new developing value area low. Now here's the real one. Is it going to test and fall out of here and be rejected? It looks like it did so as I talked without even grabbing my keyboard to be able to trade. It's dropped to the scale and likely to go on down to target. Son of a gun. I was actually seriously looking at that. Well, that's indicative of a real light market, a thin market, which is what they call it when there's no volume. It's fast. It moves fast, and it also is sloppy. It'll breeze past levels. Stops have to be widened out because they don't hold as they would normally. Things like that. Looks like everything's okay stream-wise. Zero drop frames pushing out 35,200 kbps. CPU's just barely chugging at 2%. Yeah. Pushing 1440p at 60 FPS. I have no idea why I couldn't stream 4K. I have more than enough computer for it and internet. My connection is 1 gig. It's never quite that. It's about 950, 975 up and down. Mbps up and down. Beats the hell out of me. It just never could do it. Every time I tried it, it said that it was frame rate or stream rate wasn't high enough for consistent something. I don't know what the hell that term was, but I dropped it back to 1440p, and it's just Jim Dandy. No issues. Now, if I've got this audio front clipping, whatever they call that, taken care of, I'll be a happy camper. Yeah, so that test of the developing value area low was the spot to go, baby. And what did we get? 128.1. Down, test 1. That would be referred to by Tom Traders Lab guys as exhaustion. And looky what happened after that. So we're 9.25, 6.25. There's 3. That's the scale. Now we would now be risk neutral and looking for lower for the targets. Well, there we go. Interesting day. Actually, a pretty damn good day as far as trading goes. I just was not on the game myself, but there are 3 positions: long, short, and flat. And I've been pretty vested in flat the last couple of days. We're going to try that low again, looks like, and there's our. Here would have been our scale. Short here at exhaustion, scale at 3 points. Now we're looking at the target at 9 handles, 10 handles. Nice, lovely. And that's a nice, measured, methodical kind of a trade without any heat ever. That's the kind of a trade to have, depending on the number of contracts. $600-700 trade. I got to stop clearing my voice like that, my throat like that. I didn't realize I did that till I started doing this recording, and then I started to listen to it. Impolite, and I'm sure not appealing. I suppose that's what a lot of these folks. I don't think many of these people that you see on YouTube are live. I think that's all recorded, edited, and then pushed up, or whatever you call it, published. And so that stuff can all be taken out. These are live. I don't edit anything. And there we go. Yeah, that was a nice trade. I was just too slow on the draw. My keyboards are all pushed crazy because I was typing something on the upper rack to a colleague in London. Everybody's busy, making jokes and saying Happy New Year and all that kind of noise. It's all good fun. But it's, if you're going to trade, or at least in my case, 100% focused. And that's one of the reasons why getting this audio and the stream sorted out has been top of my list, because I don't want to have to think about it. I want to just have, the mute button set. I can switch screens without thinking about it, and I can focus on trading. Just as my eyes move, I can switch the screens. When I come back, I've got everything in place. And that's, that's a big part of it for me. Plus, I'm OCD, so until I get that straightened out, it drives me crazy. Or, yeah, I guess that's OCD. I've had a lot of situations in my life where I have become unconsciously competent driving a car. You don't even think about it. You drive the car, your movements are unconscious, braking, whatever else it is. You can look in the mirror, type, talk, whatever. Flying a plane, sailing a boat, all those kinds of things. Early in my life, horseback and driving and whatnot. And that's where you need to be in trading, I think, to officially and permanently turn the corner. Because then, for example, a perfect example, I was watching this come up here and actually talking about the value area high. It's moved down a little since this, but anyway, talking about it. I completely didn't get my keyboard over in time to enter up here. This was a classic 128 stops, trades down, comes back for the target, trigger, exhaustion of 1, and down we go. And sellers hit into it. So any place in here would have been the entry. Scale down here at 3 points, and then target. Not even close. Didn't have my hand on the mouse. Was, just getting the mouse and keyboards lined up. So that's not necessarily, maybe not as much unconscious competence as focus, I guess. That was one of the good things about trading in Kuala Lumpur, Malaysia, is the time zone. I loved it. The market opened at 21:30 at night, typically, depending on daylight savings over in America, because they don't do daylight savings over there. So at one time they're 12 hours behind or ahead, and the rest of the time they're 13. So it would be either 2100 or 2200, and I could trade the open, and as long as I wanted to, completely unbothered, unfettered by any kind of disturbances or anything. And it was really great. I like that. Over here, it's I enjoy the morning. I enjoy having it be the morning and having a good night's sleep. But on the other hand, I get like just a minute ago being pinged on the upper rack there by somebody colleague from London. Hey, how's it going? Happy New Year, blah, 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 and diverts my attention away. The Trader's Lab is being recorded on an OBS on another workstation to my farthest left on a 2710 80p. You maybe even hear a little of that in the background. I don't know. I don't know if I've got my noise filter and noise gate set up properly. You shouldn't be able to hear it, actually. My wife is playing with the cats, so maybe you can hear that. It'll be interesting to review the stream and see if the noise gates are working. And here we are back at the bottom. So there was my trade. There was my scale. Here's my target. Yeah, that was a real bonehead move. That was almost as bad as the IB. There we go. That was almost as bad as the IB low continuation test and trade, which was substantially more profitable than this one. 20 handles, but still better than a sharp stick in the eye. This is 10, well, 7, 8, somewhere in there, depending on your entry. And that's something that I've noticed about myself on my journal. A lot of time I comment and I take a screen snap of both the IRT on the entry and then bookmap after the trade, which shows the lines and the entry and all the different movements, and make some comment on type comment or commentary, arrows, that kind of crap. And both of those are stored on the written journal in Journalytics. Then I also have the rhythmic output, the daily trades to an Excel sheet or a CSV file on another computer I have, which I then input into my local Excel journal. That's an old kind of cumbersome thing, but it works pretty okay. Has a lot of statistics on it, and I'm able to filter, how many trades were higher in range, and then how many trades higher in range with an IB30, and how many times did I get to the scale, the risk neutral scale, how many times I get to take a second target, that kind of thing, which is pretty handy. I don't copy the snaps over there, but obviously they're on the Journalytics and they're on this computer in the Snagit library. So I try to, be as diligent and record keeping and methodical about this process as I can be, and really, really focus on it as a business and all things that are associated with that. Boy, what a day. Had I been really on the ball, I would be real happy about today. In terms of dollars, would have been a few thousand. Instead, it's a big goose egg. Okay. Once they take that low and get into this liquidity, who the hell knows? Who the hell knows? But I can tell you one person that's certainly not going to be trying that. And that's me. And I'm also not going to be looking for an asymmetrical or a mean reversion trade back in, because as far as I'm concerned, the context of the day is one direction, and that's down. Counter rotation. Everybody got on board. Counter rotation. More on board. Boop, boop, boop. Down. Lower lows. Lower highs. So for me, there would be no longs. And there's always that possibility that the tanker is going to turn around and context will switch and, up we go. But there's a trade-off always for elements in the trade plan, rules, whatever you want to call them. And there's one for that, I might miss some trades, but I'm not going to keep fighting City Hall and keep going along again in a downtrend. Now, right here wouldn't be the spot for a short. There's only, there is 4 handles down to the extreme bottom, but it's not at a taper or at an outside edge at a location. It's it's essentially where the scale would have been from the last trade, which was properly would have been initiated at developing value area low, down. And again, this may very well go from 02 down to 99.5, but that's only 3 points. Right? So the scale is right above all that liquidity. We've tested that a couple of times, so you could start to make a case that it's a weak low or whatever. But yeah, all adding up to the fact that I doubt if I'll be trading today. Stream's on for 2.5 hours, almost 3 hours at this point. And I think what I will do is call it a stream at the bottom of the hour here. Another 9 minutes. Look forward to monitoring it and fingers and eyes and toes and everything else crossed that it's acceptable in terms of audio. Video, I don't worry. And yeah. And get all ready for a Happy New Year. This absorption is indicative of a light market. It only takes a relatively large. Just look at right here. They're in the in 3 price levels. There's about let's just call it 200 contracts. So if you throw an order of 300 contracts out there, and you're going to take out 3 price levels, that's a liquidity vacuum, if I'm not mistaken. I'm not, and I'm not. So that's how it works. That's why the higher time frame folks and some like this slow liquidity. And you notice how the liquidity is moving out of the way, a little traded out. This guy's holding on. This stuff lifted out of the way. So if these lift out of the way and the NQ continues down, we're looking for lower ground. This setup would have been an attractive one. There wasn't really a proper exhaustion like there was over here. None of which I'm taking anyway, so. But it is interesting to see. Look at that. Their liquidity jumped out of the road and down she came. 4,800 number fell. The century figure fell. This is kind of an interesting. This is the market profile. I've got the TPOs per bracket. TPOs per bracket to a number that, so I can see the entire profile. Otherwise, it's just a portion of it visible. But this is today. So we've taken out 1, 2, 3, almost 4 days of trading today. So they've about erased the week with today's trade. And they're heading lower. I guess another way to look at it, if market profile doesn't work for you, is the micro composite. Here's today. And there you have those. Same idea. Same idea. And I don't know what that was all about, but that didn't work out like I had it planned. Yeah, so they saw this massive liquidity was just, BS and bus tickets from the sounds of it. Nothing more than 100 or so contracts trading out of there. Not really a lot. Not really a lot. I'm going to end this stream at the bottom of this hour, so 4 more minutes. Happy New Year to me and anybody that ever happens to listen to it or follow it. It's disappointing that I didn't take any of this lovely downtrend. But on the other hand, I'm sort of glad that I didn't and that I stuck to my guns. Now, the next thing I have to do is rethink my guns. Obviously, it's good not to micromanage or micro trade or overtrade, but it's not good especially when you're short preference, as I am, to not partake in a move like that, which is essentially something. Think about it here. You take the IB low or the IB stat. Just, there you are. It was made, the IB was put in right. Yeah. Over here. Right in here is IB 30, right? So there's the IB. The stats taken, tested. The IB configuration trade takes off out of 48.25 and never looks back, never takes any heat, nothing. If you were a mind to manage your trade, you could bring it down to these swing highs, bring it down to this swing high, bring it down to this swing high, and you're still in the trade out of 4,800. So poor, disappointed in myself for not recognizing that and taking advantage of that trade for sure. Similarly, with the test of the developing value area low a few minutes ago. Which was also good for another 10 or so points. So, yeah, I should have some old Lang Zion music or something figured out. So this will be the last live stream of 2023. Pick it up on Tuesday, whatever the hell day that is. Second, I guess. Tuesday the 2nd. Trade actually opens Monday night at 1700 for Tuesday's trade. I'll do the holiday correction, etc. And stream will be probably on Tuesday the 2nd. They're disappointed that I didn't take these trades. Could have been quite a nice, nice boost to the accounts. Disappointing. I'll have to think long and hard about that. Replay and trade the replays to reaffirm in my mind the setups, etc. And other than that, Happy New Year if I happen to talk to you next year.